Hello everyone and welcome to this OMFIF special briefing from our Corona Consequences series. We've gathered together Danae Kyriakopoulou, our chief economist, David Marsh, our chairman and founder, and Mark Sobel, our US chairman, to discuss how the world, and specifically the central banking world, is reacting to the crisis. For those of you following live, do send in your questions to the address on the slide and I'll put them to our panelists later on. I'm John Orchard, OMFIF's Chief Executive. First, a little more on our panelists. Before OMFIF, Danae was Managing Economist at the Centre for Economics and Business Research, where she led the organisation's global research. She has also served as Economic Advisor at the Institute of Chartered Accountants in England and Wales, and also worked at the Research Department of the Bank of Greece. Danae runs all our research at OMFIF and has pioneered in recent times our ESG coverage, as well, of course, as also being an assiduous watcher of the ECB. Mark Sobel is a veteran US Treasury official who was at the forefront of international financial diplomacy for 2 decades. Mark, who represented the US on the IMF executive board until April 2018, has had a 40-year Treasury career with extensive engagement around the world. Mark founded the US-EU Financial Market Regulatory Dialogue and chaired an international group of private and official sovereign debt experts that developed collective action clauses for sovereign debt restructurings. And he managed, if that wasn't enough, the $100 billion Treasury Exchange Stabilization Fund and played a key role in US foreign exchange policy, including coordinating the Treasury's semi-annual foreign exchange report on China and other countries. David Marsh, of course, many of you know, is both a former banker and a former journalist with a career before founding OMFIF 10 years ago at Robert Fleming and the Financial Times, among other places. David is well known in both the UK and Germany as an explainer of the other one, and has been awarded by both countries for fostering relations between the two. He's written several books, particularly in the immediate aftermath of the great financial crisis 10 years ago on the euro and the European financial system, and those, of course, couldn't be more topical again today. So, panelists, I'd like to ask each of in turn about the unprecedented actions that we've seen from key central banks. We saw earlier in the week, for example, the Fed's unlimited bond buying program, which one commentator described as QE to infinity and beyond. Could each of you tell me the action which has most impressed you and why? Starting with you, Danae.
Thanks, John, and hello to all of our listeners. Yes, the Fed's decisions was definitely a very impressive one, a real whatever it takes. But for me, what was the most impressive one was the ECB, actually, even though they haven't gone as far as the Fed, just because it takes so much more effort for the ECB to agree on something. And there's a lot of different interests that are coming together. So I think I was impressed by the fact that with their first decision, they really put the pressure on fiscal policy to act, which is something that we're really seeing for the first time. But also with their second decision, the pandemic emergency program, the PEP, because it's such a big program, it's open-ended, they've really shown some creativity and flexibility there. So for me, that's the one that stood out.
Good. And Mark, what about you?
Well, since everybody is mentioning the Fed and its actions this week, I'll generalize the question a little bit and just say that I've been impressed that Jay Powell came out with more guns blazing and faster than Ben Bernanke ever did. And because we're entering an era, for better or for worse, of fiscal monetary coordination, I'd say that the US Treasury, Steve Mnuchin, working with Congress, they also acted fairly boldly and quickly. And I think history may look favorably upon how the Treasury and Congress reacted over the last few weeks.
Thank you, Mark. David, could you tell us the most impressive thing that you've seen so far to attend to the crisis from central banks?
Generally speaking, it's very good that the central banks have stepped up to the plate in terms of helping corporates. Of course, the larger corporates that issue commercial paper and so on, or the ones that issue corporate bonds, where the ECB is going to be doing a lot of buying. I think that's been impressive. I'd like to correct slightly this idea, though, that the ECB has succeeded in getting the fiscal action going. I don't think they have. I think the first set of measures, 120 billion, which they did about nearly 2 weeks ago, was a step in the right direction. They wanted then the European fiscal authorities to do some collective action. They didn't, which is why the pandemic program that Danae has just mentioned became necessary. And I've just been finishing speaking to a central bank governor from the euro area. He said we were playing a game of chicken with the European fiscal authorities, but we failed. And that's why we had to come back into the market. So the ECB doesn't look at it in a very rosy light, I'm afraid.
Well, that's an extraordinary thing to hear. Perhaps we'll return to European coordination a little later on. So that is being tested to destruction at the moment, I think, although there are some interesting moves here and there in the right direction. I wanted to ask you, Mark, whether you see any missed opportunities so far.
I wouldn't say missed opportunities so far. I think that certainly in the U.S., quite a lot's been done. I think we're going to have to monitor the conditions, stay atop of them, and then I think there are obvious things that one can look at in that context if stresses accelerates. So there are things about municipal bonds or state and local finance issues. There's corporate issues. There's talk about possibly more swaps that the U.S. could do, or maybe the IMF could help out on. I wrote a piece yesterday for OMFIF on foreign exchange intervention if the dollar, if the scramble for dollar liquidity was such that it kept forcing up the dollar and tightening global conditions. Would that be something that central banks or financial authorities would contemplate doing? And I run through my thinking on that. So I think there are a range of issues to keep monitoring and keep one's eyes on.
What Mark was saying, I agree. I think there are some missed opportunities in the US side in terms of the swap lines that the Fed has extended and eased the terms on. I think they still only cover a small set of countries. It would be helpful if these were extended to others. They also only cover banks, and we know that now trade finance is done by non-bank financial intermediaries as well. So there's more that can be done there. Also in terms of the IMF's liquidity facilities that can be complemented. We've seen some action there, but we could see more. But in terms of missed opportunities in Europe, I think it's really what David was talking about how the fiscal policy, yes, it has moved. I think we can't really label it as a lost game of chicken for the ECB. I think they have won some ground. I think it's really a big step that we have seen fiscal policy move a bit this time, but they can go even further. And I think that the big missed opportunity is in terms of coordinated fiscal action to complement what's being done on the monetary side, because at the minute, any fiscal action we've seen has been at the national level. We need to start thinking about a common debt issuance. And in that respect, the letter that 9 prime ministers sent today to from France, Italy, Spain, Greece, and others, calling for that common debt issuance is very important. It's also important in terms of an opportunity for the international role of the euro. We heard from Mark about how the dollar liquidity is becoming a big challenge. I think this kind of really taking Europe to the next step with common debt issuance would elevate the international role for the euro at the times when we see what are the challenges of relying on one currency as the global safe haven.
Danae was just talking about collective action in Europe. I know you have been talking to many of the key players on, shall we say, both sides of the argument on the mutualization of European sovereign risk. Do you regard that as a missed opportunity or one that can yet be grasped?
Well, it might still be grasped, but the problem is that this fragmentation of European politics that we have is still there. And even though we know that there's a huge to do more and a huge need for Europe to come together, I'm afraid the politics in different countries seem to be going against that. And I've noticed that even those people who support mutualization, they don't want to call it mutualization. They call it everything else because they know this is not a word that is very popular in Germany. And even though Mrs. Merkel did seem to move a little bit in that direction, I think this was actually more cosmetics than real. So it would take an almighty crisis for genuine mutualization to take place, and by then it might all be too late.
Moving along and back to the actions of central banks, the ECB, while we're talking about them, has so far avoided increasing the negative base rate or reducing rates further. And we know that the Federal Reserve and the Bank of England are very wary of stepping into that territory. Do you think it'll be possible to hold those positions via ever more spectacular forms of quantitative easing? Mark?
Well, the Fed's already unleashed a torrent of measures this week. It's very clear nobody wants to go into negative rate territory in the U.S. There are concerns about how this might impact U.S. capital markets, which are quite different than Europe's. I would say a good policymaker never says never, but I think we're far away from going into negative rate terrain, for example. And I think that what we're going to be doing is monitoring the situation and seeing how things work here.
Would you expect, given that we know how unpopular at a retail level negative interest rates are in places such as Germany, although there's still an intellectual discussion about what the rate is beyond which they are deleterious, would you expect them to be decreased further or negative rates to be increased further, rather?
Well, I don't think whatever happens, it's not going to make much difference. It would be intensely cosmetic if they were to take the rate down by another 10, 20, 30 basis points. It probably would do more harm than good, I think. And Christine Lagarde has been doing her best to maintain a consensus on the governing council. I think she knows that this could be a bit of a red rag to a bull. I think they would rather increase still further the size of some of these special measures for bond buying and some of the liquidity measures, which is supposed to be getting the banks at very, very subsidized loans to put money to the areas of the business community that actually need the money. I think just reducing still further the interest rate or increasing the negative rate still further is not going to do much good.
Danae, would you agree?
Yes, I agree with that. I think further cutting rates won't really do much, and it's also good that the ECB resisted that so far. I think we will first see other measures before anything, the relaxation of the terms of the purchasing program, for example, the issuer limits and the capital key that we know have been discussed already. There's still not agreement in the Governing Council about this, but this may be the next thing we see. Another area where we could see things is also the supervisory side. We had a commentary on the OMFIF website about this by Ignazio Angeloni, former member of the European Central Bank Supervisory Board, outlining the different options there in terms of how what is done for the real economy should also be done for banks in terms of providing more support. So there is other things that they can do before a rate cut, which wouldn't do much, helicopter money, etc., other ideas that could also be on the table.
Okay, thank you. Very helpful. There have been some remarks about the efficacy of the communications policies, both at the Fed and the ECB, fairly or not. What's our view, starting with you, David, on how that has gone and whether the criticisms are fair?
The ECB is always going to be in a difficult position simply because you've got here the 19 countries plus the 6 members of the executive board who are all coming at it from slightly different perspectives. And people say that after the great financial crisis of 12 years ago, the ECB as a whole has become much more in the hands of factionalism. People speak for their countries much more than they do for the whole of Europe. So getting any kind of consensus is relatively difficult. Christine Lagarde has done quite well. She did make something of a gaffe by blurting out the truism that the ECB isn't there to lower the spread between German and Italian bonds, although that might be technically correct. It wasn't the right thing to say at that time. And so I would put that down as a black mark, which she's partially recovered from. In the meantime, she's still got a long way to go, I think, to really prove herself, although she's clearly the most amazing woman in many, many ways. But she has got to learn the new rules of central banking, which is not quite the same as being a finance minister or being in charge of the International Monetary Fund. One thing that I think is lacking is the degree of coordination. There is no coordination between the individual central banks. Everybody is doing their own thing, following each other perhaps, but there's not the same response rate that we had after the financial crisis in 2008, 2009, when there's much more communal spirit. And I think that is something of a handicap.
The Fed is subject to criticism from all quarters, including sometimes the president. How are they handling their communications, in your view?
Shockingly enough, Jay Powell has been getting praised by the president this week. I think obviously the Fed's shock and awe is extraordinary. I think the public sees it. Now, a lot of what the Fed is doing is highly technical, involving esoteric aspects of our financial system. The public understands that the economy is going to face dire straits. I think the public can see the gyrations in the stock market and understand the extraordinary nature of the times. I guess what I'm not sure is if the public realizes that the Fed's actions in basically keeping liquidity pipes unplugged just means that we're going to avoid a depression, but we're not going to avoid a hugely deep recession, hopefully a short one. So I think that's an important consideration. But I think the Fed's been doing a decent job with an immediate focus on just keeping the liquidity pipes unclogged.
Tonight, just finishing up on this communications point, the ECB in particular has an almost impossible task to please the stakeholders in it. How do you think they've done on communications?
I would agree with what David said on communications. I think it was an unfortunate moment for the ECB. I think we live in a time where countries that have been most hit by the pandemic, unfortunately, happen to be the ones that in the previous crisis were also badly hit, such as Italy. But this time it's really an exogenous shock. So you really need to see this being symmetric across the currency union. You really need to see the support of the institutions. It's a textbook case of when you would need that support. And I think that's why communication is very important, that we're there to support different economies from the shock. I think what David said, yes, it was good that it was corrected fairly quickly, but it did do some damage. And I think it's also about coordination, both in the case of the Fed and in the case of the ECB. We haven't seen this very successfully. I think the Bank of England and the UK Treasury are a good exception here, because we've seen them, the communications be very coordinated on the economic front. Now on the health policy, it's a different story. But when we talk about the support measures for the economy, there has been good coordination there, which the Fed and the ECB could look to.
Thank you, Danae. I just want to put a question we've had in from Javier Dennis on a related theme. How far can the monetary and fiscal coordination go on both sides of the Atlantic, and would we expect helicopter money happening in some form? David.
Helicopter money, if you define it simply by the government sending checks to citizens, will come in, I believe, because there'll be a need to bail out individuals who lose their jobs. Of course, the people who may be the most needy won't have an address, perhaps, where you can send the checks to, or won't even have a bank account. So this could be that this kind of helicopter money would go to the wrong people. The idea of actually crediting an account that an individual might have at a central bank with money might well come in as well, but there's a long way to go before the technical specifications for that are in place. And you wouldn't start doing that during the crisis. But I think there will be now more effort given to this idea of direct injections of cash into people's bank balances by the central banks. It can't happen overnight, but it's maybe less of a taboo subject than it was a month ago.
Mark, would you agree with that? There are, of course, unbanked people, even in the US. and Congress has had been quite bogged down with the horse trading of the last few days. What do you see? How do you see the prospects for helicopter money?
Well, if I think about this in terms of the monetization of fiscal spending, of debts and deficits and the like, I think we're certainly headed there right now. We're going to see a tremendous expansion in debt in the United States, and we're going to see a tremendous expansion in the Fed's balance sheet. And I think this is just inevitable. I think it's going to happen, elsewhere as well. I think this is going to raise interesting questions for central bank independence. I did a podcast with OMFIF a few months ago with Jean Boivin of BlackRock, who had proposed with some colleagues a standing facility to coordinate fiscal monetary cooperation if a shock were hit. And partly the motivation there was to create the facility so that it would be structured and it could preserve central bank independence and decision making. I think there's going to be a major question going forward.
I think that's an important point, Mark, and we'll come back to that in a moment. What does this ultimately mean for the role of central banks if economies are being fundamentally reorganized by this crisis? That's a very good point. We've had a question in that I think's very interesting, as we spent all of our time essentially talking about developed markets. Jean-Philippe Steins of the EIB has asked us to address calls for forgiving or delaying interest payments with respect to African countries. Danae, what do you think about that?
I think that's a very important issue to raise because emerging market countries are the ones that will be hardest hit from this. We've already seen outflows from emerging market economies be very, very fast and significant, actually more significant than we saw in the equivalent time elapsing from other stress moments, such as the collapse of Lehman Brothers or the taper tantrum episode. So they are really under stress. Yes, they have built defenses since the last crisis. Every year, OMFIF monitors the level of central bank reserves, and emerging markets in particular in Asia and the Middle East, also in Africa, have been increasing their central bank reserves. But we all know that reserves are only good as long as you don't have to use them. So they do have external debt, and their currencies are coming under stress, especially oil exporters. So I think it is important to consider them here in terms of debt sustainability measures. The liquidity facility lines of the IMF and also swap lines can all be good measures to support emerging markets in distress episodes. A bit more controversial, but also something worth looking into are capital controls.
Thank you, Danae. Mark, you've worked as we mentioned earlier, on rescheduling sovereign debt. What do you think about the question I've just asked on a degree of restructuring or even forgiveness for emerging market sovereigns? Well,
one longer-term consequence of the crisis will be that many countries are going to be under stress, and I think we're going to have to look at sovereign debt restructuring issues again. In the meantime, I noticed this morning that the World Bank President Malpass and IMF Managing Director Georgieva have proposed forbearance or forgiving interest payments from low-income countries by official creditors. I think that's an idea they're going to be pushing. I think an immediate priority, though, is to get cash, so to speak, to some of these countries. Danae mentioned that the IMF can play a role. I've argued that one very fast vehicle to get cash out the door would be for the fund to use its rapid financing instruments and to up access under those instruments. Similarly, the fund can augment programs and the like, and the World Bank can step up in these areas as well.
Okay, that's very helpful. I'd like to nip back to Europe, as it were, David, and explore these themes in a little more detail about European integration or disintegration. Which direction do you think Europe will move in as a result of this crisis, based on the conversations that we've had recently and the actions that we've seen over the last week or so?
There'll be more lip service given to this, so you might say a couple of faltering steps forward. This message that, Danae, you were talking about from the Prime Ministers calling for common issuance and so on, that'll be difficult thing for the countries like Germany or Austria or the Netherlands to say completely no to that. So there will be some faltering steps, I think, in terms of the symbolism. Whether this really adds up to very much, I don't know, because there is just the feeling that countries like Italy, that have required a lot of effort in past years and are still not growing at a high rate, and indeed their overall GDP is below what it was in 2010, that they need to show somehow that they can use the money wisely before more money will come. So we are in really a vicious circle where money is needed for short-term and longer-term redevelopment and shoring up efforts in a lot of countries, and money does have to be made available simply to shore up some of these large gaps that are opening in deficits and in overall finances. But there's not the political will or the trust to send those pieces of money into these areas. So they'll dress up the disagreement. They won't want to show that at Europe's hour of need, the politicians are failing. So they will not say, we're not going to do this. They will not say, we're never going to do a corona bond. They'll not say, we're never going to do mutualization. They'll simply hedge it in with all sorts of very difficult to achieve conditions, which will actually end up making the situation no better. So I'm afraid I'm not very optimistic, but also I don't think that we'll see an immediate end to all this, because people have a big interest in keeping going the game that Europe is somehow going to unite as a result of all of this, even though that may not actually be the case.
On the specific issue of the ESM, where simply put, Germany and Italy are at odds, what do you think will happen? Would you expect it to be adapted to current circumstances, or for there to be a standoff between Germany and Italy that can't be resolved?
The message that we get from all the Italian politicians is that this is like a poisonous message at the moment. The ESM, or the EMS as it's known in Italy, is carrying a great deal of stigma, in the same way that, Mark, you know the IMF very well, in the same way as the IMF was viewed with stigma after the Asia financial crisis more than 20 years ago. So if the ESM, which has got a pot that could be assessed of about 410 billion, it could be accessed, and not the whole 500 billion, they could take out some substantial funds that will only be flowing to those countries if there's not any conditionality attached to it. And the conditionality in any way would have to be there to say the funds are going to go to certain development projects, or they're going to go to build hospitals or whatever. There'd have to be some control over the funds, but even a small amount of conditionality may be too much for the Italian parliament to bear. And the German parliament and the German authorities may want much more conditionality. So the ESM is very frustrating and very worrying that the ESM, which is an up and running financial vehicle and does have firepower, it may not be accessible for these political reasons. There's also no time for Europe to dream up any great new facilities. So we're going to be stuck probably with the European Central Bank, which wanted no longer to be, quotes, the only game in town, end quotes, probably still will be the only game in town, because there aren't enough other facilities which are either technically or legally or financially or politically usable to go around. So it's back to the ECB, quite the worst outcome, I would say, in the circumstances, but conceivably the only one that's going to take place.
Danae, you've noticed earlier a number of European leaders are calling for collective action. Do you want to talk about what that is and how it might work briefly, and then we'll move back on to other themes from Europe?
Yes, no, I think it's interesting that in that letter they don't explicitly mention the ESM. I think, as David said, it is a very poisonous message that is associated with it. I think in terms of where Europe is going after this, we have to remember the words that David has also put in his piece on OMFIF of Jean Monnet about one of the founding fathers of the European Union, that Europe is forged in crisis. And we've seen that in the past decade. I think now we can also see very swift action to make use of the instruments it has. So I wouldn't completely rule out the ESM. I think what David said is valid in terms of the legal and political difficulties with doing so, and conditionality will be a very negative blow, given that a lot of people in Spain and Italy in particular, which are the hardest hit countries at the moment, are feeling left out from Europe and let down. That there is not enough support. We're seeing the opposition from Germany and the Netherlands mainly. So I think it will become a very important issue. But the letter that I mentioned that the 9 prime ministers wrote is calling for a common debt issuance. And that will be a very difficult thing to achieve politically, but I think it is inevitable that we have to move in this way if there is to continue to be Europe.
It'll be an extraordinary piece of progress if that does happen. I've had a number of questions in on financial stability. I think it's very important. We'll go through some of those now. Ouida Taff from Financial World wants to know if central banks will have to take further steps to support the repo market. Very worrying and unusual gyrations going on there, Mark. What's your view?
I think that the whole effort of the central banks has really been directed at calming funding markets, pumping massive liquidity into the system. I think that some of the stresses have been receding this week. Certainly, I look at the cross-currency swap market and the basis points for that. So I think they're all over it. They're watching it. They will do clearly whatever it takes. And we will have to just monitor the situation.
A similar question from Jean-Philippe Steins again, EIB. There are ominous signs in the REITs market of unmanageable redemptions and so forth. Do we expect this crisis to reignite problems in the real estate and real estate financing markets, which could then cause financial stability problems? Mark?
This is one market I really don't follow that closely. I think that the Fed is stepping in and accepting MBS as collateral to a much more active extent. So again, I don't want to sound like a broken record. I think there may be stresses. We'll have to see how long the crisis persists when we get to the other side of it, and the central banks will do what they can to bridge that crisis.
David, do you think that financial stability is an unrecognized problem in the post for the supervisors and lenders of last resort of commercial banks? What are your feelings?
Well, there's two sources here. One is the banks, which clearly will not be receiving the interest which they've been hoping for on mortgages and other loans, and where there'll be a fall off in new loans. So they will be hit mightily hard by a fall of revenue. Their NPLs will be going up. So the kind of forbearance that some of the supervisors or former supervisors are now calling for, I think is going to have to be taken on board to allow the banks to be kept afloat in different ways. I think we're going to see more bank mergers, actually, particularly in Europe, because there will be a dive to go into larger institutions that will be seen as somehow more solid and more capable of withstanding any financial storms. And that's said even despite the fact that the banks are in better state than they were 12 years ago. They're clearly better capitalized and they're not so risky as they were then. But this whole sovereign doom loop and so on that we've heard about, it could still be a problem for the banks, particularly if we started to talk about restructuring of some of the debt of Southern European states. So that's one element that concerns me. And the other one is the financial markets, the REITs, redemptions and so on. We remember that the big storm that got kicked off in 2007 came because some of the property funds and other illiquid funds, they had their doors shuttered to people trying to redeem the funds. This has happened with a few real estate funds in the UK already. Clearly, this crisis does have big implications for real estate markets and for valuations across the sector. People are so shell-shocked they can't start to think about whether valuations are really going to change grotesquely. If the crisis goes on just for a few short weeks, as your Mr. Trump, Mark, in Washington hopes it will, then maybe the real estate prices could bump back again fairly quickly and they could prove to be fairly resolute. I think the worry would be that the crisis continues for longer and therefore some of these illiquid funds, which will be mopping up large amounts of money, both from retail investors and institutions around the world, could look snowed under and they could look very illiquid and it would be impossible to redeem, just at a time when many ordinary people want to redeem to meet cash needs. So from both the banking side and also from the financial market, particularly the illiquid asset side, I do see potential storm clouds ahead.
Danae, do you think that there are financial stability concerns, or are the central banks ready based on all the lessons they gathered from 10 years ago?
Yes, just to add to what David and Mark have said, with the trend that we've seen, at least in the public investors that we monitor every year, so this is the central bank reserves, the sovereign wealth funds, and the public pension funds, over the past years, they have been moving their asset allocation more into these illiquid and more risky asset classes because the yields on traditional assets that they've normally held in their portfolios have been so low. So they've moved into things such as real assets, real estate and infrastructure, equities, corporate bonds, which for central banks are unconventional assets, but also for sovereign funds and pension funds that have moved more into these assets. And now these are coming under stress with the shocks that we're seeing in the equity markets and also the real estate market that Mark is talking about. So yes, they are at the moment looking to revise these allocation decisions, but this is a big risk in terms of how their portfolios will be affected.
Thank you. One issue that seems pretty different this time from 10 years ago is the degree to which there is international coordination. I know, Mark, you have views on that, which we'll come to in a moment. We've had a question from Wolf Raymer on those lines. He says there are very differing approaches between countries such as Sweden, Iceland, etc., and the US differing approaches between states. Is there a long-term impact of this lack of common approach, Mr. Raymer is asking? David?
I'm afraid there is, and it is a sign of this fragmentation. It's also the self-isolation that we see in individual countries and in individual homes. This has been mirrored on a wider scale, isn't it? Because individual countries are looking certainly to themselves. It is interesting that when Mr. Trump closed the borders only about 3 weeks ago, it was thought of as being a very insular movement and very unpopular. But in fact, it's been mirrored in other parts of the world, closing off of borders. And just as we see the physical closing off of borders for all kinds of medical reasons, which actually do make sense, in the same way, I think we're seeing the psychological closing off of countries, and they're concentrating on their own needs and their own requirements and their citizens' own fears first before they start thinking about other people. In a crisis, people do tend to look inwards, I believe. And it's at a time like this when you do need a European Union or a NATO, shall we say, or other bands of common brotherhood that play a role to make people think over and above and beyond their own national boundaries. But I'm afraid to say psychologically, people are now looking inwards. And I very much regret that. But I think that is what is happening. And therefore, Iceland, it's Iceland first policy, it's a Sweden first policy, it's a Germany first policy. It's no longer just Mr. Trump doing that. That's spreading around the world. I do hope that it comes to an end.
Mark, you yourself coordinated international actions and responses. Do you think that's missing this time, or is it just late?
I think it's largely missing. It comes across as piecemeal. Certainly, the extent of cooperation that exists among kind of the G20 health side is substantially less than what exists on the fiscal and monetary side, or the finance ministry and central bank governors. I think the central banks are, certainly keeping their hotlines busy and talking and doing their thing. On the fiscal side, it seems as if everybody's coming in their own way, some big, and certainly there's been recognition that fiscal needs to step up, that it just can't be monetary policies. The IFEs are doing some of their own thing, but it's all seemingly uncoordinated. It doesn't come across as a whole, as a package. I fear that one of the reasons, the main reason this is happening is that we face very different leadership in the United States. Obviously the global economy has changed, but I think in 2008 and 2009, the Bush and the Obama administrations were able to step up, especially the Obama administration. I think that leadership, the vision, the willingness to work across borders, the willingness to put forward ideas, I think that's lacking right now, as David has suggested.
So it's an asynchronous response. I've had a question in from Neil Williams at Hemis about the recovery and whether that will synchronize or not. When the fog does clear, Neil asks, which regions or even countries will lead the macro recovery? Do you have initial thoughts on that, Danae?
Yes, thanks, John, and thanks to Neil for the question. Just to add on the previous question, also we have to remember that the enemy this time is a common one, that the virus doesn't carry a passport. So closing borders, yes, it's an important measure for self-isolation, but in terms of the coordinating responses, we have to remember that this is a global issue. And I think in terms of the recovery, we can rule out a V-shaped recovery at this stage. It looks like this will be a persistent shock. The question is, will it last 1 quarter, 2 quarters? We can look at some evidence from China there, but it looks like in Asia we may see the recovery start first, because we have seen more containment of the virus there. I think Europe will be hard hit, especially if we don't see the response and how it comes out of this. It's a really big shock for the cohesion of the euro area, and it could come out very badly out of it. On the other hand, if they do move ahead with more integration, this would give confidence for the euro area to continue and recover well. As I said before, I think emerging markets will be very hard hit. So I would say that the US and Asia would come out better than the others. Europe, it depends on what action they take, and emerging markets, it looks quite bad. But that's a generalization. Of course, we have to look at emerging markets individually, but just as a group.
Mark, your country did an exceptionally good job, all told, getting out of the last crisis quickly by taking dramatic, rough and ready, but dramatic action at speed. Do you think the US will be quick to recover from this crisis?
To amplify a point Danae was making, I think the recovery is going to depend heavily on when countries can begin to see the health crisis in the rearview mirror. So you see China, which took very dramatic actions, is getting back up on its feet and getting back to normal. And so I think that a lot of the question for the U.S. is going to be, when is the health crisis subsiding? When can people get back to normal? And then how does all this macro policy support kick in? So I think we will see U-shaped recoveries in the second half of the year, and they could be decent snapbacks. And that is what I would expect for the U.S. But I think we have to get past the health crisis before we can begin to lay the foundation for the snapback.
Are you suggesting that the economic measures will be more effective than the health measures to address the crisis?
I think the health has to be overcome, but I think then people will get back to activity, and I think the macro steps will further the snapback.
Okay, I've had a fascinating question from Dirk de Stockalper, Cornalytics, which is somewhat on the theme we've just discussed about coordination. Derek asks, post-crisis, do you see new types of public-private platforms responding dynamically to future global health and environmental challenges? And could central banks also play a role? David, a rather fascinating question.
You have these foundations all over the world, don't you? The Wellcome Foundation in this country, in the UK, or what Bill and Melinda Gates are doing in the United States, and all sorts of other areas where there's great repositories of scientific and technical and medical wisdom. If you think of all the large companies involved in healthcare, an area where I do hope some of the listeners have been putting some of their stocks in recent weeks, there's really a fantastic reservoir of expertise. And so an intriguing idea of whether the central banks, which have all this money in reserves, just earning negative interest rates, whether some of this money might be put to use to somehow finance, maybe in a foundational way, some of this research. I would have thought this is more an area where the sovereign funds, who are of course all slightly underwater at the moment and having to scramble to raise money for their individual countries, the sovereign funds, more than the central banks, I think, might be interested in this kind of public-private partnership. There again, we might look to the United States for some sort of a lead here, given the scale of the foundations, given the fact that some of the world's richest men and women are there. They're not going to be any richer as a result of the last few weeks, but they will still maybe have money that could be put to spend on such platforms. Just being optimistic just for once during this rather gloomy outpouring of Jeremiahs, it could be that this is an area where the United States and China could team up, maybe not with the explicit blessing of the current incumbent of the White House, to indulge in such public-private medical partnerships, pooling together both private and public money. That would be one relatively good outcome from what otherwise has been a very sobering crisis.
I agree. So let's cross our fingers for that. Danae, we saw outliers recently grumbling about extending the roles of central banks beyond directly the management of monetary policy and bank supervision and so forth. And what do you think about this fascinating suggestion that central banks may play a part in the public-private partnership or cooperation which could help address future crises like this?
I think for this particular activity, I would agree with David that it's more a question for the sovereign funds in countries that have them, because they have been investing heavily in technology, in health. This is another trend we've seen. But on the role of central banks more broadly, yes, you're right that we've seen them expand their activities into areas that have not traditionally been considered the areas for central banks, such as climate change or technology and digital currencies, for example, before this crisis erupted. But I think when we're looking at the post-COVID world, I would say that the central banks will probably become less relevant than they are now. What we're seeing is governments really step up more. We're seeing this being more of a state response, and the onus is coming onto the finance ministry. So there has already been discussions about the questions of central bank independence before this. I think this trend is also being sped up by the crisis we're seeing now, where this division between central banks and finance ministries is starting to break down.
Thank you very much. I'd wanted to slowly draw to a close now with a fundamental question about the role of central banks following the crisis. Firstly, thank you to all of those who've sent in questions. Apologies for the one or two that I haven't had a chance to read out in the interest of continuity and time, but thank you very much. We greatly appreciate your input and engagement. My final question to the panelists is on this fundamental role of central banks in the future. Do we think if economies are reordered and there is a much heavier involvement in the state, even temporarily, in managing economies, that the role of central banks will therefore be somewhat reduced. David?
I think it will be reduced to the extent that they will no longer be the independent arbiters that they were supposed to be in the last 20 to 30 years. I remember President Mitterrand of France, one of the great movers behind the Economic and Monetary Union, he once said very dismissively about the central banks that they were mere technicians, like telegraphists, who were simply transmitting the orders given to them by the governments. And of course, that was very badly seen by Germany. But that will be the case because there'll be now more and more interactions jointly between finance ministries and central banks. There may even be de facto mergers between central banks and finance ministers that you might see in places like Japan. There'll still be institutional buildings and different hierarchies and so on, but to all intents and purposes, you might actually end up more or less merging the MOF and the Bank of Japan. And they'll no longer be the proud independent souls that they've learnt to be in the last 20 to 30 years. Charles Goodhart of the London School of Economics, he's been saying for many years that central banks will never be able to raise interest rates if the need arises, because they will become so unpopular, because they'll drive so many countries into absolutely unsustainable debt. And he said if they did try to raise interest rates once the crisis ends, then they would be immediately put back into their boxes and made very dependent on government. So I'm afraid to say it's the end of the line for independent central banks. Also, just one last point about Jay Powell. I was really shocked to hear, Mark, that Mr. Trump has actually praised Mr. Powell. As you said, that was really shocking news, and that really doesn't bode very well, does it, for the future of the Federal Reserve? They must be doing something wrong if the President of the United States has praised them.
And what do you think, Mark? That's absolutely true. But what do you think about the broader point that central bank independence may perversely be threatened by this crisis because of the state need to directly intervene in the economy?
Well, I think there are definitely going to be profound ramifications. I mean, this question of fiscal dominance we've seen in many countries throughout the world, where fiscal debt gets sufficiently high that it begins to dictate monetary policy outcomes. David just discussed this. There's these questions of financial repression. For me, this is worrisome development because in the United States, my feeling has always been that we needed a flexible tool for stabilization. Fiscal policy was not that tool. Fiscal policy is frequently a mess. We have our politics surrounding it. And the one thing politicians would like is a free lunch, so to speak. So I think it's very important. In my lifetime, I thought it was very important to have independent central banks. I do think the crisis will have implications for that. But it brings me back to my point. I still think we're going to need some independent tools for macro stabilization. So if the central bank's freedoms are going to be impinged upon in the future, I think that we need to figure out principles and structures for relationships between finance ministries and central banks, rather than just assuming willy-nilly that finance ministries and governments can make the central banks totally subservient and boss them around. I think that would be create negative outcomes.
Thank you, Mark. Danae, I think if I can take liberties with what Mark's just said and suggest that politicians will continue to want someone who can't answer back to blame for economic problems, which is another role that central banks fill, being a bit tendentious here. What do you think the prospects are for central bank independence, or indeed, as Mark has just suggested, better coordination between fiscal and monetary policy as a result of the crisis?
Yes, as I said before, I think we will see less of a we will see more of a pressure against that trend of central bank independence following this crisis. But yes, it has been convenient for politicians to have the central banks to be the only game in town, but that's no longer the case now. The central banks are no longer the only game in town. So we've crossed that bridge, and I think once we come out of that crisis, we will see new models of central bank government cooperation, and we'll see the model that has dominated in the past be questioned and reformed.
Okay, well, thank you very much. Thank you, everybody, for listening. Apologies for the intermittent tech problems. My mic and speakers cut out in turn as an extra part of the challenge today. But I think we've had a very good and interesting and wide-ranging discussion on the central bank response to the crisis, and we intend to do plenty more. So please do join us next time for the OMFIF special briefing on the corona consequences. Many thanks, everyone.